no gain. Now to the bulls and bears. Why hide behind false modesty, folks? Let's just admit it. My call several weeks ago that the recession is over. It just keeps looking better and better. So let's hash it out, what's happened in the economy and what Fed Chairman Ben Bernanke had to say today with Michael Pinto, chief economist with Delta Global Advisors. He's a very erudite bear. Bill Smead, chief investment officer with Smead Capital and manages the Smead Value Fund. He's a bull. John Brown is a senior market strategist with Euro Pacific. He's an extremely bearish guy, at least in the U.S., I imagine. And Lee Munson is Chief Investment Officer with Portfolio Asset Management. He's a bull. Lee, let's start with you. Last week you were on this show, and I think you mentioned one tech stock that you wish you'd gotten into, SanDisk, and I noticed a day later it went up 7% on the market in a single day. What do you think of these markets, and what do you think of Bernanke today? Do you think he gets reappointed?
I think he gets reappointed. I mean, the only thing funny that he said in his op-ed piece of the New York Times was he thinks a Fed exit is going to be smooth and timely. Now, we know it's not going to be smooth and timely, but I think he's a smart guy. You know, he clearly stated today that he's got 4 or 5 ways to take out this excess liquidity, this $800 billion in reserves. He has a plan, and he's not afraid to leave the punch bowl maybe a couple minutes longer than he should, but he also is under such scrutiny he's not going to make a mistake like Greenspan did.
Right.
So I think he calmed down, and he didn't say anything really different other than the smooth and timely part, which I think is, you know, it's
Bill Smead, you know, one clear message I thought today is he is not going to be raising interest rates too soon. We may not see it until 2011, and that would be good for the stock market if he holds to that. True?
Well, those are interesting and important, but huge institutions, endowment funds, pension plans, dramatically under-own large-cap quality U.S. And individual investors own the least amount of common stocks they've owned as a percentage of their net worth going back for the last 15 to 25 years. So what you've got is you've got what you're talking about, and you've got the government on your side, and there's a squeeze going on that should go on for 2 or 3 years, we think.
And so investors should flood in. Now let's get to the other side of that coin. Let's go to one of my favorite sometime bear, Michael Pinto, bear on the U.S. economy. Michael, I read an article you wrote either yesterday or today where for one of the first times, I think, you were talking about how to fix all the problems you see. You see way too much inflation, way too much money supply. The Fed has just, you know, done way too much of this promiscuity. But you talked about tax cuts and cutting back government as a way to fix it. Tell me about that.
You have to empower the individual, and you have to take away the power from government. That's how you get growth. And growth has to come from an economy that provides a stable currency. And that is the Federal Reserve's purview. And why anyone has any confidence in this gentleman is absolutely beyond me. He thought it was a great idea to start buying the 10-year Treasury note when it was trading at 3%. That is unbelievable. And let me read to you what he said on June 10th, 2008, 3 months before the economy collapsed. This is one line that you have to keep in mind. He said, "The risk that the economy has entered a substantial downturn appears to have diminished over the past month or so." He doesn't have a crystal ball. He's a human being. I respect him,
so
but I call him Banana Ben.
Well, you don't respect him, Michael. You actually would not reappoint him. John Brown, what are you coming on this?
I would only not reappoint him because I was afraid would they replace him with somebody who's capable of collapsing the dollar at an even greater pace.
John Brown, go ahead. Take your piece.
Well, Dennis, first of all, may I thank you for having me on my show. I watch it almost every night. I think it's great. And I thought I was going to agree wholly with Michael. But I'm afraid I don't wholly. I have great admiration for Bernanke and Paulson, who I think were handed a can of worms, and they have averted a catastrophe.
They've turned into worm soup.
They've averted a catastrophe in the financial markets, but they haven't averted a recession. And that's the problem, is that the financial system still remains inflated with all the holes in the balloon plugged by the taxpayer and hot air pumped in what they used to call fiat dollars. So it's a dangerous situation, actually. And, of course, earnings have been high in the financial area because you've had...
Okay, guys, you know what? I'm sorry I'm being told to wrap here, but let me just say to my bearish friends out there, you're in danger of missing out on another little nice run on the rally. You could be right 2 years out, but wrong for right now. Thank you very much, Bulls and Bears, for being with us. And listen, folks.